Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, March 25th. Sorry for the kind of later report here today. I was just kind of going over some changes here with investors and loan programs, so I'll touch on that here in a little bit. But we'll start off with the economic data we usually get every morning, and we'll start off with the durable goods orders for the month of February. We had back in December, or I'm sorry, in January, it was 0.1% growth. It was forecast supposed to be no change for February and actually jumped up much higher at 1.2%. So as you'll see, this is mostly large ticket items like transportation that kind of increase that, because if you look at excluding transportation, January was actually a good month, went up 0.6%. However, it contracted, it dropped by 0.4%, or forecast calling for 0.4%, and actually contracted by 0.6%. So our ticket items on this are primarily on big ticket items like transportation here. Now we also got the FHFA home price. This is actually for January. Sorry, I forgot to put that in there. And it rose back in December 0.6%, which was nice. FHFA home price, let me go back a second here, is basically a measurement of loans with conforming loan limits. So you may even see a bit of a spike for January as they increase the loan limits for conforming loans in January. So we'll take up a little bit more loans in that category. So, but in December, we saw a 0.6% increase. Uh, we also saw a 0.3% increase in our forecast, and it came in at forecast of 0.3%. Its year over year went up 5.2%, so which is a good number here, but we'll have to kind of wait until we see more up-to-date data from March or April data before we really kind of see the effects of what we're in, since we're in a new environment as of right now. So a lot of the data, again, we're seeing for February and even some parts of March aren't going to be reflective to what the current environment we're in right now, as things dramatically shifted to a completely 180 here. Let's see how the headline news is faring. Stocks are up a little bit, which is good news. And again, it has to do, it's been waiting for a stimulus package, and it sounds like they had come to an agreement, which is supposed to be released at some point today. I don't know the specifics on it, but it seems like there was an agreement between a bipartisan agreement made, and at least with a handshake, and expected to be announced at some point today. And I think it has to be voted on through the Senate and Congress, or through Congress first before they probably announce it. But anyways, it sounds like something was uh, expected to be announced here today. So we'll keep our fingers crossed, and we'll probably touch a little bit more on that tomorrow once we get more specific information. So we'll look ahead here to the bond market, see what's up here. We were up earlier today. We were up actually about 20 basis points, or 30 some, or actually 36 basis points, touching the ceiling, which has been tested here a few times. We're currently down about 8 basis points right now, so we could be getting a pricing change here for the worse, as depending on when lenders came out with their pricing. So if we were up here and we dropped that 36 and now 8, so almost 44 basis points, some lenders are going to probably price for the change. They're very quick to changing their pricing due to the volatility of these markets, and I'm going to touch on a few points here. So so please pay attention here. Markets are shifting very quickly. It's getting to be a reminder of the credit crisis, so you're starting to see some effects from what we saw in the credit crisis happening immediately. Monday, we had the jumbo market as well as the non-QM loans. Some of these niche programs are things that just fit outside of the agency guidelines, like your conforming limits. Those are basically being shut off. You're not going to, unless you, there may be a few lenders that are close to close, they may close those, but right now, for the most part, those are suspended. Some business may go away because right now there's no market for these. So what happens is that sometimes us lenders will have investors buying these, and then those investors will have an outlet to maybe sell uh, on the open market, and people like PIMCO buy from those guys. So right now, those basically are being shut off, and it's just trickling on down to our origination. So if you are in a situation like this, be very cautious, because unfortunately, you may get the ugly phone call that it may not close due to this. So if you have something, try to get it done quickly, and and keep your fingers crossed because a lot of things are changing dramatically. The other thing happened today. We got government loans. The servicers are basically stating that they don't want to buy these. So we have a few out there that are a lot. The majority, there's a lot of them are not buying these, primarily because what happens is with the concerns of all these people going on unemployment, not being able to make their payments. They don't make their payments. The servicer, on unlike the conforming limits, the servicer has, regardless if the borrower pays it or not, they have to make that payment. So they're liable for that. So they don't want that extra risk associated with it. So if you do see some of these, you're going to see a lot of the lenders come out with their overlays on these, which means they're going to add extra restricted guidelines to protect themselves on these type of scenarios, like higher FICO scores, maybe different down payment requirements, or what they call loan to values, lower loan to values. So there's going to be some changes in those regards. So just be very aware of these and talk to your loan officer and help navigate your way through these things. So just want to give you a heads up what's going on out there, and more changes could be happening. This is kind of a very fluid motion, and the markets are dramatically shifting, and it doesn't mean a lot of these are going to go away, but some of them are just kind of sitting still on the sidelines and waiting for the dust to settle, because right now there's a lot of uncertainty out there. Until we get that certainty, that will be the catalyst. Then they'll reassess things and then move on from there. So at some point, maybe later on, we'll go on. But just be prepared for extreme volatility right now. Okay. Treasuries, we were up earlier. Now we're down back to where we were, so there's no change. It's about 0.81 right now is what we're looking at yields wise. All right, so that's pretty much the wrap for the day. I hope that information was useful for you guys. If you guys are in California looking to buy or refinance, please reach out. We'd love to be able to talk to you guys about your scenario and how we can hopefully navigate you guys through the current environment. Best way to reach me is direct message me or email me. Email is the quickest response time. And you guys have a great rest of the day. We'll look forward to see you guys in tomorrow's video. Bye-bye.